Hello, I'm Steve Balch, the Director of Wealth Management and Financial Planning with Certa Financial Planning, here to give you our monthly market update for August. From a macro standpoint, we continue to be the same for now, but we are starting to get a lot of mixed signals. The market trend continues to be positive. The first half of July saw strong gains with a modest pullback the final 2 weeks. The good news is that even with the market sell-off, the underlying breadth was strong, with many stocks gaining even as the index was negative. We will see what the next couple of months have in store, as they historically are more volatile. The Fed policy continues to be neutral. The Fed held rates steady at their July meeting and noted that progress on inflation has been happening. All eyes are on the September meeting when the first cut is expected. Fiscal policy remains positive as the federal deficit continues to be 6.8% of GDP. Economic leading indicators continue to be positive, but weaknesses are popping up. Wage growth continues to stay above 4% year over year. Job reports continue to be strong. However, job openings are shrinking, and the change in full-time employment year over year has gone negative. These are signs a slowdown may be coming. Valuations continue to be neutral. July saw high-valued stocks like U.S. growth give back some gains, while some other better-valued markets like small cap start to turn around. Time will tell if the rotation to more value positions has legs. From the market regime and business cycle readings, the market regime upgraded back to Goldilocks. This regime happens when inflation is decreasing and growth is increasing at the same time. This is a risk-on environment. The business cycle continues to stay in the late stages as the U.S. economy has seen continued expansion for 51 months. The latest GDP report for second quarter was 2.8%, well above the 2% estimates. These are the three questions we're monitoring. Has the market peaked? Is the Great Rotation finally here? Does Biden dropping out change things? Has the market peaked? July started strong, but limped to the finish for another positive gain. July did see the market have its first daily drop of more than 2% in a day since February 2023. These days are not fun, but they are common. Some of the best stock market years have seen multiple 2% drops. These drops do tend to lead to more volatility in the short term, and we'll see headlines trying to take advantage of the fear. For instance, Bank of America has recently called for the S&P 500 to have peaked for the year. We are not here to make predictions, but we do want you to be aware that the market rarely peaks in July. Additionally, even with all the volatility in the index, the underlying market breadth was quite strong, with many stocks outperforming the index for the month. These are signs that a peak is probably not in. Is the Great Rotation finally here? For most of this year in 2023, the market performance has been due to the Magnificent Seven in growth stocks. However, after signs of inflation getting closer to the Fed's 2% target, the market saw a rotation out of large cap and into small cap stocks. Additionally, we've seen a rotation from growth into value. This rotation saw the Russell 2000, the small cap index, gain more than 10% in July. Historically, when small cap stocks have seen 10+% gains in a month, the next year tends to be strong, with the average return being close to 16%. If this broadening rally continues, this would be a positive for the bull market to continue. Does Biden dropping out change things? Does President Biden not seeking re-election change the trajectory of the election year seasonal patterns? Historically speaking, when a sitting president runs for re-election, the markets tend to perform well, especially in the months leading up to the election. So far, year to date, we have seen a typical re-election year pattern playing out. However, when we have an open field for the presidency, this has historically caused volatility to increase in the months before the election. We'll be watching to see how the markets react and views Vice President Harris's nomination over the coming weeks and months. It's worth noting, since 1900, 5 other presidents have decided not to run again. 4 of the 5 years saw stocks gain 16.5% on average. Right, Roosevelt in 1908 and Coolidge in 1928 saw big gains late in the year. Our positioning and outlook. As the start of August, our models have moved to a neutral stance across all strategies. The big change is the upgrade from underweight to neutral for preservation. This is due to the expected rate cuts in September, which have caused yields to fall. We did get a signal to upgrade to overweight growth early in the month, but it quickly moved back to neutral. Historically, August has been a volatile month, but an election year since 1950 has bucked that trend. As of this video, August has gone off to a strong has not gotten off to a strong start, as economic data has raised fears of a recession and the Fed beginning to cut too late. For now, we continue to monitor the markets and rely on our internal research to adjust the portfolios as needed. We thank you for watching. As always, please feel free to forward this to anyone you believe can benefit from the information. If you have any questions, please feel free to reach out.